Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Another way that you can be smart is through energy. And obviously, we hear more and more about that. As oil continues to rise, there was the big crisis last summer when oil was up around $150 a barrel. Everybody's talking about being smarter with energy. And that goes along with the smart car. Here at BigTrends, when we do some of our mentoring and coaching programs, we really like to talk with people about making smart goals. And that's just simply, everybody likes to make goals and set goals for themselves that can, really get them to where they want to go. And SMART is an acronym here for us. So if you want to write that down, you can go ahead and write it down. The S in SMART stands for specific. So you have to be really specific about your goals. For example, as a trader, don't just say you want to be profitable. How profitable do you want to be? Say maybe, we're nearing the later stages of 2009 here. So maybe you say, in 2010, as I really get things focused towards that, between now and the end of 2010, I would like to be profitable to the tune of up 20% during that period of time. And obviously your number could be higher or lower than that, but it's got to be specific. The M is measurable. So you want to make sure that you're able to measure your goal. Did I reach it, yes or no? There should be no gray area there. You should be able to clearly define, yes, I reached it, or no, I did not. The A is attainable. So is it a goal that you ultimately can reach? Now, going back to the example of saying I want to be up 20% between now and the end of 2010, you don't want to jump into a situation and say, I want to be up 150% between now and then. I guess theoretically it is possible, but you also have to be, it has to be an attainable goal, and the R in SMART, it has to be realistic. So kind of tying those two together, you want to make sure that it is something that you can reach. It might be a little bit of a stretch, but it's something that you can reach. It's realistic. It's not completely over your head where you're ultimately setting yourself up for failure. And then timely. You want to have to be able to set a deadline or a timeline on when you're going to be able to reach that goal. So in the example I set, through the end of 2010, well, then you should be able to look at things on January the 31st of 2011 and say, did I meet my goal? If I did not, where were some of the breakdowns? And obviously you can create SMART goals with time frames in that, maybe on a weekly, monthly, or quarterly basis. They don't have to go out as far as a year. But you want to make sure that your goals really have that SMART characteristic to them as well. Now, one of the smartest indicators that we have found in terms of spotting a trend is %R. Now, a lot of you might be familiar with this particular indicator. It was created by a gentleman, very intelligent technical analyst named Larry Williams. Larry designed the indicator really as a way to quantify extremes where the market might reverse and change direction. So similar to how Bollinger Bands were initially created, if you get a break outside the Bollinger Band on the upside, well, that means that there's too much bullishness in the market. The market's likely to pull back, right? Same concept with %R. Basically, it was trying to quantify how bullish or bearish the overall market is. And then once you have that quantified, are you at an extreme in bullish or bearishness where you would expect potential pullback and reversal in the opposite direction. Now the R, for those of you who might not be familiar with this indicator, stands for range. So it's % range. So basically what you're looking at is the particular indicator, whatever setting that you use. You want to say during that particular setting, we actually use a 30-bar setting. So we've tweaked the normal 14-bar setting to actually a 30-bar setting because it smooths out some of that noise. Remember the information overload that we were talking about earlier? We're looking to smooth some of that out even more through the use of our indicators. So using a 30-bar setting, this works for any time frame that you're trading from, by the way. We've spent years trying to really focus it and hone it in. So whether you're trading from a weekly chart or whether you're trading from a 5-minute chart, it doesn't matter the time frame or anything in between for that matter. We still use the 30-bar setting ultimately. So what you're looking at in the last 30 bars is the highest high and the lowest low during those last 30 bars. Well, that's going to be your range that you're looking at. So what this indicator tells us is within that range, where are we? Are we in the top 10 percentile? Are we in the bottom 10 percentile? Where is that? So to let you know some of the rules that we use some terminologies here that you may or may not be familiar with, but we use the term setup and then confirmation. Ultimately, one of the phrases that we share a lot is that one bar does not make a trend. So we like to see a two-step process to confirm that there is in fact, and so we don't get faked out and whipsawed out of a particular trade. So in doing so, it's the two-step process. The first step is on a particular bar, you have to see a setup. On the next bar or in subsequent bars, our rules are within the next 5 bars, you have to see confirmation. So on the bullish side of things, we look for an overbought reading above 80. Once %R goes above 80, that's going to be our bull setup. Now, this original indicator, if you have it on your charting platform, originally went from 0 down to -100. We flipped that. So now it goes from positive 100 down to 0. The concept's still the same. We just felt like it was a little easier to deal with positive numbers as opposed to negative numbers when we were working with our clients. So that's the way we've tweaked it. So on the old scale, it would be an overbought reading would be above -20. Here we're talking about above 80. In terms of a confirmation, once you have that setup bars close, so we have our overbought reading above 80 to give us our bull setup. To get a confirmation, we close above the setup bars high within the next 5 bars. So not just a subsequent close above 80 on %R, we then look at the price action. What we're looking for here is to see a series of higher highs, because that tells you that the bulls are really in control. Not only is it a bullish trend, but it is a very strong bullish trend. And there's a difference between just having a trend and having a strong trend. So obviously we want to find the strongest trend that is there. We do have it as well. And ultimately, on the retest, once you have a bull confirmation, so we've had our setup and we've had our confirmation, we've gone through that two-step process. Then we go back to watching the %R indicator. And when we get a break back down in the %R indicator below 80, to eliminate some of the noise, we technically put our settings at 79.50 or less, but just for simplicity purposes, we'll say when it breaks back down below 80, that's a retest. That's not a signal to get out. That's what we call a retest. Once you have a retest on the bullish side, the low of that bar is your new closing stop. So if you get multiple retests during a trend, you continue to tighten your stop. And we do use closing stops. So we wait for the close of a particular bar. We don't have hard stops out there, because I know all of us have experienced a time where you've been in a particular trade, you had a stop, you got taken out during the day only to see the position reverse back in your direction by the close and then continue on without you. So we use a closing stop where we wait until the close of a bar. If it then violates, we exit at our next potential opportunity. So if you're a daily trader, we wait for the end of the day, read the charts from there, and then if you need to exit the trade, we'll do it the next morning. You are going to have a little bit of a gap risk there, but you're limiting or eliminating your risk of being whipsawed out of a trade by using this method.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.